Welcome to another stage analysis video. It's Sunday the 1st of December 2024. I'm going to start this weekend's video with a look through some of the watch list stocks from the weekend post before getting into the more regular content. So Tesla first up today, which has been in the watch list a number of times of late as it started to push back higher again in stage 2. You can see it's starting to tighten up again just above the plus 1 ATR level at the moment. So this is the ATR bands go from the 21-day moving average, 1 ATR, 2 ATR, 3 ATR as your average, normal average range. So when it gets extended outside of that range, it becomes a little bit short-term extended, but doesn't necessarily mean it's the end of the move as such. So we look for opportunities as it comes back into the range and tightens up still in the uptrend. So anything above the 1 ATR level is considered within the short-term uptrend, for example. So at the moment, pulling back into that level, starting to rebound again a little bit on Friday. The consolidation has been on contracting volume, which is what you want to see when it's going sideways. See, it's up over 60% since the earnings reaction. Moved out to stage 2 a while back in early part of July, but then fell back into the range again before making a new stage 2 attempt. It started to push back out again in the later part of October and the earnings reaction. If we go to the weekly stage analysis chart of this, you can see that in a little bit more detail. You can see the prior structure, which did turn towards from stage 4 into 4 minus and then into stage 1 and quickly broke out into stage 2. See that it came back into the range again, undercut that level a bit, so knocked it out again, started to develop a broader structure, then started to push back out into stage 2 again through this area here. So it's been running well, back up towards 52-week highs. Stage analysis technical attribute score is currently at a 9. So get technical attribute scores go from a 0 to a 10, 0 being the weakest, 10 being the strongest. So Tesla at the moment, if we look at its group, you can see leading the auto manufacturers group at the moment, which has had a choppy move for the whole group. If we quickly click through into the group page itself, you can see there's still only just above 20% in the group that are on a technically healthy score. So this is our SATA 6 Plus chart, which shows the percentage of stocks in the group that have a SATA score of 6 or higher. So 6 being a strong score, and obviously 3 and below being a weak score. So at the moment, percentage of stocks above their 30-week moving average in the group just below the 40% level as well. So this has been improving, and the SATA score has improved a little bit, but it's still very low at the moment. So the vast majority of stocks in the group, as you can see, are on weak stage analysis technical attribute scores at the moment. Only a few, such as General Motors, Tesla, so if we put them in order, 4 industries here, and XPeng actually on a strong score currently. So if we come back into the Tesla chart here, you can see mental relative strength has been above the 0 line now for a number of months as well. And if we come back to the daily chart, as I said, tightening up around the plus 1 ATR level. So looking for further continuation breakout, potential VCP maybe. Obviously tightening up through here, may need to tighten up a little bit more. That would be give a lower risk for a potential continuation, but it is in a promising position still. Next up, we've got FSLY. So FSLY has been developing a base structure since this was an earnings gap down, which it is quite famous for in terms of it's had many over the last few years where it's had big gaps to the downside following earnings. Start to see a little bit of a change of behavior recently with that, as it didn't do that finally on the previous earnings. Let's just quickly get the symbol summary up for when the last one was, the 6th. So come back into here. So when was the 6th? So actually gapped up slightly, then gave it all up again. So this is what we call a change of behavior. This was the earnings reaction, previous earnings reactions, obviously big gaps down within the last year and previous years. So this is a change of behavior through here. Did actually gap up, did give it back up again quickly, but then we had this significant bar through here, so quickly reversed all of that and started to push back towards the upside again. See the 1 ATR level here just sitting above. So in a short-term uptrend, you can see the declining 200-day moving average is starting to move into range as well. We've got this downtrend channel which has been broken here, little inverse head and shoulders, which is starting to push to the upside. So we're currently in stage 1. If we go to a weekly chart on this, so lastly, you can see that structure that's been developing through here. You've got that inverse head and shoulders through this area here, so roughly the downtrend channel through here. So you can see the change of behavior as it starts to get back above the 30-week moving average, but the 40-week moving average on there, which is just below, so your 200-day moving average proxy there. So the fact that it's above the top of the range starts to get back through this area here, then potentially could start to move into stage 2. You see the Mansfield relative strength still below the 0 line, and the SATA score is still on a very neutral 5 at the moment of 10. So if it does start to break above through this area, we would see the SATA score would start to improve through here as well. Mansfield relative strength potentially start to break above its 0 line, and we could potentially see a stage 2 breakout attempt. So back on the daily chart, that would be somewhere through this $9 area at the moment. 894 is the 200-day moving average at the moment. You can see that the structure would be above multiple pivot highs at that point, so potentially your stage 2 breakout area would be through this area at the moment. So you can see at the bottom of the chart, it is quite away from the Mansfield relative strength 0 line, but this clearly is a change of behavior in the short term to what we've been seeing over the last year or so with this. We come back to the weekly chart, you can see it's had a big stage 4 decline. We turn on the stages background, you see it's been in stage 4 since back at the early part of the year. Here's February time there, when it broke back down after a failed attempt to move back up into stage 2 again. So starting to shape up again. You see the previous time it started to break back out into stage 2 in 2023, had a decent run before rolling over into stage 3 and rolling back over again. So potentially setting up again, as we said, starting to get to levels. So if it does get through that $9 area, potentially could move back to stage 2 again. Next up, LEU. This has come up a number of times over the last few months since September. It led the way for the uranium stocks out in September, as lots of them reversed in stage 4 and started to move higher. This has been going sideways for a while and quickly reversed and made a stage 2 breakout. Very strong move. You can see moving from 45 up to well over 100, so more than doubled through this area here. You can see, so 130, 140% or so on that initial move, and there's then since been chopping, going sideways, pulled back into its 50-day moving average and rebounded again in the short term and starting to push back towards the top of the range. This dotted line here is the weekly close of this area, and here the highest weekly close within this range. So we've got a little double bottom pattern forming on this one at the moment. Some big moves in this, 10% on Friday, so these bars don't look huge, but it's been a volatile one, and you can see volume has been increased through the initial part of the stage 2 move. Again, come back to the stage analysis technical attributes chart here, type the right letters. You can see that obviously as it started to move out into stage 2 through this area here. Obviously previous to that, get the 40-week moving average on there. You can see that the increase in volume dramatic compared to what it's seen over the previous couple of years here. So a big change in volume, contracted on the pullback through here. We've got this significant bar in the near term. So if it gets above this area here, so come back onto the daily chart, right at the top of this structure, so the 95 area particularly there, then this could obviously make a continuation move in stage 2 here, but remains in stage 2 currently. As you can see, the stages down the side here, technical attributes has pulled back from a 10 to a still strong 7 at the moment. So anything above a 6 is considered strong. When we have pullbacks, come back towards the lower end of the strong range, and sometimes drops back into the neutral zone, but doesn't always. So generally when a stock is in stage 2, it remains in the strong zone for the majority of the time, 90% of the time on average. So this at the moment leading the way with the uranium stocks here with that move, but we have seen some strength in other areas, CCJ, DNN, NNXC, UUUU. UEC, all got slightly stronger scores at the moment. So, but if this one starts to push back, it will push back up the ranks again. But Cameco, for example, has been the near-term leader and one of the biggest stocks within that group. So it's been a theme for a little while now. So this one still looking interesting here.